How's it going, Bo?
Hey guys.
Yeah,
Great
so
to meet you.
Bo and I first chatted. We connected early 2018. When I chatted with him, I thought he was a pretty unique cat. I definitely call him another propeller hat. But yeah, we kind of kept in contact, and you've had a lot of success, getting started with this 6 rental properties in 6 months. So I thought I'd bring you on, and a lot of the information that you're going to kind of get from Bo today is going to be pretty pertinent to getting going from 0 to 30 miles an hour. Um, it's not going to be like talking to a guru, and they'll tell you like these secrets from the past that don't really apply. It's kind of like you buy some of these online courses, and it's like, dude, this is what like people were doing 5 years ago, and everybody's doing it, and it's not working anymore. So just a little bit more about Bo. He is in California. He's picked up these, again, 6 rentals in 6 months. And so he's a remote investor. We'll talk about Turnkey a little bit today too. Um, his markets are Indianapolis, Kansas City, Little Rock. And during the day, he is also a senior consultant for a regional CPA firm. So he's living the side gig life, the double life. And, just like a lot of you guys, hopes to create passive income to become financially free. But let's get to know you a little bit better, Bo. Maybe tell us a little bit about the backstory. How'd you come to finally Googling how to make money on the internet, and our paths crossing?
Yeah. So I think it kind of started at a young age, actually. So my parents, we immigrated here from South Korea when I was 5 years old, and we kind of settled in Orange County, California. So my parents, they wanted to get a good education for my brother and I. So we're kind of looking for good school districts, and we naturally became renters. And I noticed that we were renting from this nice Chinese lady. And every month, she would come around and, physically pick up the checks. And, later I realized that was to kind of keep an eye on her rental property. And every year when we re-signed the lease, she would bring her son along. And her son was about the same age as I was. I think I was about 10, 11 at the time. And, it got me thinking, it seems like she's teaching her son how to be a landlord. And I was wondering, I was asking my dad, hey, why aren't we, buying a house and, renting it to other people so we can collect the checks? And I never really got a straight answer from my dad. And it was, he was like, we can't afford it right now. It's not for us, kind of deal. So that kind of planted a seed in me where I was thinking, hey, when I grow up and I have the opportunity, I want to be a landlord. I want to collect the checks.
I had the same exact thing that happened to me. I think I was maybe about 7 or 8 or 9, and I asked my mom the same thing. It's like, well, why don't we do that, right? It sounds like we can make money doing this sort of activity.
Yeah.
And the idea got squashed. It's like, oh, you don't want anybody to do that. They're gonna screw up the house.
Yeah.
I think we're in a little different situation. You kind of immigrant, right? So you guys are renting. I'm fourth generation American, so we had a house to live in. So I think my mom was kind of coming from a place of, we don't want to mess this up. By no means, we're still like middle class,
Mm-hmm.
by no means rich, and definitely you weren't what is that, crazy rich Asian.
Yeah.
But like, both our parents kind of taught us the same thing, right? Like, don't do that, man. Like,
Yeah. Yeah. So, I mean, that kind of planted the seed in me. And then, after I got married about 2.5 years ago. My wife and I, we bought a primary residence in Orange County. And it was a modest 3-bedroom, 3-bath townhome. And, we only needed one of the rooms. So I was using the other room as kind of like my library, kind of my home office when I work from home. So the extra room, we ended up actually renting it out to a family member. So, the cash flow was coming in every month like clockwork. And, I would get like a quick pay at the first of the month when, I'm on vacation or when I'm taking a trip or out for work. And I'm realizing this is awesome. Like, just like what I was thinking about when I was younger, this passive income, I'm not having to work for it and it's coming in like clockwork. So that really got me intrigued. So I started looking up on Bigger Pockets, buying books, audio books, talking to local investors at these REI meetups, and figuring out, how I can buy rental properties. Just because, just like in Hawaii where, housing prices are really high, so a lot of people are equity rich. Here as well, the house price for a regular single family home is going to be $500,000-$600,000. So I needed to figure out how I can create cash flow, and the answer for me was out of state rental investing. So once I figured that out, I started finding people who are local to me that have been investing in out of state markets such as Indianapolis, Kansas City, Little Rock, Memphis, and started to just pick their brain because, I wasn't about to recreate the wheel. I knew people have been doing this for years and years and years. And I just wanted to pick out the best practices and kind of form my own criteria and then just run with it.
Yeah. So when you're, you had this experience of you're like, man, this works, right? This person's paying me my rent. What was the time lapse between that point to finally getting to your first RIA meeting, essentially kind of kicking you off?
Yeah, I think it was about 4 or 5 months actually. So since we started renting out the property, and then it didn't dawn on me until month 4 or 5. I'm like, this is great. So I went to the local RIA meetings, and then on Bigger Pockets. The biggest, I guess, webinar that changed my life was Brandon Turner had this introductory webinar. The Q4 of 2017, you got to take action, like the 90-day challenge or something like that. So that really kicked my butt. And, I was like, okay, I'm super motivated. It's a 90-day challenge. I want to get at least one property under contract by the end of 2017. So that's when I started, searching for deals, talking to other people, and figuring this stuff out.
What was it that finally crossed you over to the out-of-state investing? And what did you find at those RIA meetings? Was it useful? Do you still go?
I don't go as much. I think it was great for me to kind of get an overview of, how people are investing, what their thought process is and things like that. Because, at the end of the day, the way people are kind of looking at cash on cash, the debt service coverage ratio, rent to value, things like that were pretty similar. So, I got those takeaways from the RIA meetings, and the networking was also really great. I keep in touch with a couple, local investors that I meet at these meetups. But in terms of, out-of-state investing, I got to admit, in the beginning, there was a lot of fear because, I really didn't know these cities. I have never been to Indianapolis. I've actually been to Kansas City when I was younger, but I had no idea what these markets were like, what the demographics were like, things like that. So there was a lot of fear in the beginning, but, I talked to a couple different investors who helped me overcome those fears. And kind of as we, bounce ideas off of each other, and the more that we talk, it kind of helped dispel some of those myths and those fears that I had, and transition that into, okay, now I'm ready to take action. And the most important advice I got was actually to fly over to those markets. And I was coming from a scarcity mindset where I didn't want to spend, money to fly over there. I'm like, the internet is, so, updated these days where I can just do a Google view search and look at the home, or I could go to Neighborhood Scout, go to Trulia, Zillow, all that stuff. But once I actually flew out to the markets, it was very different. What I consider a B class in Orange County was very different from a B class in Indianapolis or Kansas City. And also, the street by street, things like that, it really helped level set my expectations so that going forward, when I'm talking with a property manager or a broker, we were kind of on the same page in terms of what I was looking for.
Yeah, it's a couple of the big mistakes I see these days is people their expectations aren't calibrated. They're still reading random stuff on the internet saying that you can pick up a $700,000 property that will rent for $1,000.
Right.
It's just not going to happen. And then I think one thing that you kind of did there is that you met the people. I mean, so many people just keyboard jockey their way and, ask for properties. And especially today, man, I've seen in the last 2-3 years, I think you and I talked about this when we talked earlier this year. And I was like, yeah, you and another one, guy like this who's going to pick up rental properties across America. And it's just not going to happen. I don't know. I mean, maybe I was a little mean to you at first, but no, you're cool. So it's kind of nice just kind of following you. And so what did you kind of do first, to break it down for the guy listening who, I mean, it's possibly they're going to be in another 90-day challenge, or it seems like challenges are like the thing these days.
Yeah. Just to break it down, I would say, for me personally, it was just educating myself in the beginning, going to these meetups. And a lot of these meetups that, the 2-hour meetups that they host are for the introductory level investor, in my opinion. And I supplemented that with books and audiobooks. And my favorite thing is podcasts, right? So there's a ton of good resources out there. My favorite is Narada Real Estate. He has a really good podcast. Lane has a really good podcast. Joe Fairless has a really great one. I mean, those ones, if you kind of look at the beginning, it kind of tells you step by step what to look for. I mean, when I was looking for an insurance guy, I immediately did a search on Lane's podcast and see, okay, who does he use? And, he had an interview with Ed Backus, and I was like, okay, let me talk to him. So I hit him up, and I talked to his brother Mel, actually, and kind of picked his brain about, insurance and how that all works. So I think it kind of, it's like a waterfall effect. So, once you start studying and listening and educating yourself, I think one thing leads to another, and you continue to, educate yourself further in the world of real estate investing.
Yeah. So I just like to point out that, there's been a few podcasts that I've had to pull. So yeah, I like the guys that I have on here, but you never know, right? And things change, and I reserve the right to change my mind, right?
Yeah.
Just putting that out for folks. It's always good to get the latest scoop because things change. But you're like a lot of guys, they all start out with podcasts, books, audiobooks, doing this. And at what point do you transition from being a bookworm to actually doing stuff? I mean, if you guys go to my podcast or on my blog, I have like Simple Passive Cashflow /books or book. I forget which one it is, but I only have 4 books on there, and that's what I really think are the essentials. Everything else is just mumbo jumbo. I'm more about take action and go and analyze 100 properties. But what would you say is a transition point? Because I mean, you obviously made the transition to actually getting stuff done instead of being an academic.
Yeah. I would actually say that transition was relatively short. So like last November, I started kind of researching real estate investing. And then I would say a couple weeks later, because I remember around Thanksgiving time, I hit up pretty much like 30 different people that included turnkey providers, that included brokers, property managers, and other investors and wholesalers in the different markets. So it kind of went from, okay, educating myself on real estate investing. Then I went to out of state, how to be successful out of state, and then choosing the out of state market. So I landed on Kansas City, Indianapolis, and Little Rock. Although I did study Memphis for a long time. And then it went to hitting up all of the turnkey providers and agents, brokers, wholesalers because I needed to know the players in the market and see if I was comfortable working with them. So I think I shared this list with you. I had a massive spreadsheet with about 40 different people that I was trying to talk with. And I know you've kind of added a couple referrals to that list. And what I did was, I talked to all of them and, just get a feel, once you have a 30-minute conversation with them, I feel like you kind of have a good feeling of, who this person is and if they're really listening to you. Because I would talk to wholesalers and brokers sometimes and kind of let them know what I'm looking for. And they would send you properties that are totally out of what I'm looking for constantly and say, hey, we got just the deal for you. And I don't know if, they're just trying to release things in their pipeline, but I'm like, this guy's probably not listening to me, because I was very specific in Indianapolis. Hey, these are the properties that I want, but I'm getting properties from all over the county. So, I mean, things like that. And you kind of, naturally scratch them off your list, or if there's like any red flags. The thing with property managers that, I realized was that when you ask them questions, right, they give you all of the right answers and they give you all the answers that you really want to hear. So it's really hard to kind of separate the good ones and the bad ones. But the way that I kind of came over that was, when I flew over there, I actually met them in person. And I also had, a couple different investors who I really trust, kind of really vouch for them. And then I got one property with them. It went fantastic. And then I got 2 and 3 with them, and it's just been awesome. So that's another way I kind of took action and kind of funneled through all of the different providers.
Yeah, a couple of thoughts that come to mind. If you put yourself in the shoes of a rehabber or turnkey provider, you're just having tons and tons of more turnkey buyers show up like Bo, and there will be more in the coming years. And that's kind of why they're just, Bo's just kind of a number until he buys one. And that's just what you have to understand. Also, everybody has their list of providers. Number one, I wouldn't really ask for that. I used to have a list. Bo's got a list, but it's outdated already. I'm trying to resurrect one and trying to recreate one because, I've got this platform and people are always asking. But here's the thing, right? Like, the one key thing that Bo did was that he went out, he met the people, he built a relationship. So you may have, someone may be on your list, but you have a totally different interaction with them, So, these guys out there, they're saying this guy is better than this guy. Well, you never know what's really happening, right? They might have a really good working relationship between the two, and you're just another number. The reason why they get such a good relationship is because quite possibly you would get such a horrible one. So just saying, keep that in mind as you guys move forward. Yeah, one good thing I think, Bo, that you did well is, you met mentors down the line. Maybe talk a little bit about that, how you got in contact with people, and, tell the folks, how do you not become an asshole and, just not be another, I got this question. Tell me about this. Tell me about that.
Yeah, that's a great feedback, because I think when I first had the call with you, you kind of mentioned that, right? Make sure, when you're starting out, put yourself in the other person's shoe, because the real estate experienced investor doesn't really need another newbie like me to ask him a bunch of questions and take away his time, when he's trying to look for deals and get things done, right? But so I kind of kept that in the back of my head when I was reaching out to various folks. A majority of them actually surprised me because they were willing to take the time and kind of share their knowledge. There were a couple of different guys that I reached out to in the Hui group, the pipeline, and I just hit them up on Facebook or sent them an email or whatnot, and we just started to talk and build a relationship that way. And then there was another guy that I just found his website through Bigger Pockets. I reached out to him. He's been my biggest mentor, my biggest influence. He invests in Indianapolis and Alabama. And, he's really helped me, analyze my deals, kind of bounce ideas off of each other. And, I was thinking, okay, he's given me so much value. What can I do for him in return? So a lot of the things that I feel like I'm good at is researching, calling different people. Like I mentioned before, I had the laundry list of brokers, wholesalers, other vendors. So, I personally, quote unquote, vetted them. So, I was like, hey, I'll pass this along to my mentor in case he needs a roofing guy, in case he needs an HVAC guy or whatever. And then also, you're always looking for good lenders with good rates, or, if you're trying to get a HELOC or whatnot, I probably called like 20 different banks. So I kind of had that list, and he told me he was looking to get a HELOC on one of his rental properties. So I shared that list to him, and things like that, where I feel like I can also add value and kind of, because what I have is more hustle at this moment, right? I don't have the knowledge that, a mentor might have. So, what kind of hustle can I provide to share that experience with him as well? And, one story that I like to add is, this was with another person, but when I was flying over to Kansas City, I had different meetings set up, but I had one day where I was kind of, it was open, and I was going to drive around the neighborhood, kind of see the different, areas. And I reached out to a couple investors who are in Kansas City, and I just asked them, hey, I'm heading over to Kansas City. Is there any areas that you might want me to check out? And a couple of them actually reached back out to me. I think 3 of them asked me, hey, do you mind just swinging by my property and maybe taking some pictures of the outside, things like that? So I was like, sure. So I drove by those neighborhoods, took some pictures. One of the properties was actually, this investor was a hard money lender. So he was lending money to a out-of-state local Kansas City investor. And he wanted to understand, what the progress is like, is the rehab actually being done, whatnot. And I actually went there and I was taking pictures, and there was nobody. It was supposed to be, being rehabbed right now. There was nobody. There was just a lot of, materials in the back, inside. It was kind of down to the studs, and there was like nobody there. So I took some pictures for him. I was relaying that information over. And then the neighbor from the next door came over and said, hey, what are you doing? Why are you taking pictures? So, I thought she was spooked out because, this random Asian guy just taking pictures of her neighbor's home. And she was actually saying, hey, do you want to buy my house? And she was asking, hey, come take pictures of my house. So I took pictures of her house. It's a duplex in a really nice historical area where homes go for $300,000. And, I was just chatting it up with her. It seems like she was retired and she kind of wanted the money to go, do her retiree things. And I was like, so how much would you want for it? And she said 180,000. So I said, okay, that could kind of leave some room, because overall the house was in pretty good shape. And then the husband came along and he's like, oh, no. She doesn't know what she's talking about. It's 220,000 actually. So I got all that information. I kind of relayed that to, the investor friend who wanted the pictures. And, I didn't follow up with him to see if he took the deal or not, or if he reached out. But, that was just another experience where, he was super thankful that not only did I take pictures for him, but I actually got him another lead where, if it's going to appraise for 300,000 and, the purchase price is 180, it kind of leaves a lot of wiggle room for a rehab and maybe a cash out or whatnot. So, that also kind of sparked an idea in me. Okay, so how can I continue to provide these values so that, people would like to work together with me, and it's a mutually beneficial relationship. So I really try to keep that in mind.
Yeah, and what you just come across as not like, there's quid pro quo guys out there, and it's hard to tell at first, but you can kind of tell at the end. But you're definitely not one of those guys. And one thing I will mention is, as you're going around and trying to find a mentor or no one will really be your mentor. I mean, that's just, you're not going to really have a mentor. It's going to be more of a bunch of unofficial mentors where you kind of help them out and you kind of reconnect, every 6 months or a year or whatever. But, whatever you do, don't just say, hey, how do I help you, man? Like, hey, Bo, how can I help you? It's like, at this point, Bo and myself are busy. I don't have time to think of ways for you to help me. Like, you got to figure out some way, like how Bo did, to add value to people that they don't even know, and go out and do it and say, hey, I did this. Yeah, can I do anything more? And then let the ideas flow. Because, I mean, it drives me crazy. It's like, how can I add value to you, Bo? You know, like
No, you're right. And just to add to that, I do have a bunch of unofficial mentors, and I would like to add, I think also you kind of got to see if there's a good natural fit. I mean, you can't really force the relationship, right? Like Lane just said, you can't be like, hey, how can I help you? You talk to them and see if there's a good fit, and you guys kind of share the common goals and outlook in life in general. And also, Lane and I talk about this is like, hey, would I really want to hang out with this person? Is this somebody that I would want to work together with? And not just because this mentor is successful or has a bunch of rental properties or has a lot of money. It's like, hey, would I really want to hang out with this guy? I think is my personal criteria that I also look for. And also, there have been people who are like, hey, Bo, I want to help you out, or I want to teach you and whatnot. But, it kind of turned out like they wanted to sell me something instead. They were a marketer who didn't really disclose that information, and they were trying to get a bunch of referral fees. Or also, there are people who are like, hey, reach out to me anytime. And then I reach out to them and crickets for like days. And sometimes they don't even respond at all. But, whether it be Lane or, I have a guy in Indianapolis that I talk to a lot who invests in Indianapolis. And, Lane's friend, there's another guy that I talked to in Kansas City, and he's been, a tremendous help for me as well. And, these guys, I know they're super busy, but we've just built a relationship. And I know that these guys are going to respond in a day or two and provide feedback. And, if they ever need my help, I know that I'm going to do my best effort to respond as quickly as I can. So, it's been a really good, relationship with these, mentors and unofficial mentors. And I'd also like to say, like Lane mentioned earlier, if there are people, these gurus who are talking about their deals from 5, 7, 10 years ago, it's probably a different market now. So just be careful, for the newbies out there who you take the information from, because I think, you want it to be really relevant to where you're investing and the types of deals that you're trying to do, whether it be, 1 to 4 units or multifamily or Airbnb or whatever. So just be careful where you get that information from.
yeah. So are you talking about Brad there in KC?
Yeah. I wasn't sure if he wanted to be named. So
Well, he's kind of come out of the shadows here, because he's if you guys go to Simple Passive Cash Flow / lending, me and my buddy Brad, we're kind of teaming up, doing pretty good things in KC. So
yeah,
I mean that's how I wanted to make this thing. Like this club and the website was all about connecting with the right people, meeting up with people like Bo. We just kind of keep the relationship going, and Bo will do his thing, my other buddy Brad will do his thing, and then we kind of team up later. Something bigger. And it starts when you're kind of new and you build the relationships in the beginning. I'm kind of like, I mean, everybody kind of listens to the podcast, so that's kind of my big branding thing or marketing thing, I guess. But a lot of people are doing good things, and I kind of trying to hang out with good people is the thing. So let's get into some tips here to so because you're right now, you're kind of past the whole turnkey thing, right? You kind of graduated to doing the more BRRRR strategy in KC, Indy, and Little Rock, because you ran out of money, right?
Yeah. So, I've been, using different strategies. My first couple, I had money saved up. And then I got creative, got a 401k loan on one of these and used that to borrow property. I've also used the HELOC to borrow property. And I realized, hey, as long as I can find these deals at, 70 cents, 75 cents on the dollar and refinance out, then I'll be able to recycle my money and have that velocity in terms of growing my portfolio. So I've been slowly transitioning into BRRRRs. But, just to caveat that, a lot of my friends and like the newbie investors will hit me up and say, hey, is BRRRR the only way? Should I go straight into BRRRR? And I would say, not necessarily, because there's a lot of risk that you're taking by doing the acquisition and the rehab. There's a lot of unknowns when you're doing a BRRRR. So it can be very lucrative, and it might save you more money in terms of buying straight turnkey, where your down payment is kind of stuck in there. But I would say a lot of the risk shifts to the investor. So you want to be very careful and make sure that you have a trusting team in place before you venture down that path. And also from a turnkey perspective, I know this is the pitch a lot of turnkeys make, but it's true. If you're replacing a HVAC and a roof and doing all of the rehabs that, in my definition, a turnkey should do, then if you're with a 20% down payment, you're probably getting that $5,000 HVAC for $1,000 because it's financed. In terms of if you're trying to make the repairs yourself, after you purchase, it's going to be that full $5,000. But granted, the goal is to refi out. But there's a lot of nuances in there versus a turnkey and a BRRRR. And I wouldn't necessarily say go straight BRRRR for that newbie investor. You might get burned.
Yeah. And it's kind of like, people are like, they buy fixer upper, and I'm like, no, that's like the worst thing you can do, because you're not financing, like you said, that HVAC costs. You're kind of buying it all. But I think the big thing for the BRRRR strategy is that you've got your contractors. You got multiple of them, because man, these guys, they get thrown in jail. They get behind on their payments. They go belly up, and it's pretty common. It's a thing. So you just have to have multiple of one.
There's actually a Facebook group of like bad contractors, and like every couple of days there's like a wanted poster. It's like, don't work with this guy, he ran off with my money. Like, don't work with that guy. It's crazy.
Yeah, and that's why they call them contractors, right?
No,
bad joke. But and also consultants.
Senior
consultant. All right. So anyway, you got these turnkey providers out there. I think I forgot to mention that, if a turnkey provider is pretty good, if they're smart, they're not working with turnkey investors. And I think I mentioned that to Bo. I was like, you gotta cool it down a little bit, buddy, because these guys are gonna be like, oh my goodness, this kid is gonna be such a pain in the butt to work with. We're gonna get to inspection, and he's gonna like have a spreadsheet on like all the things he wants us to fix. Screw this guy, right? Because it makes more sense for these good turnkey providers to just flip the property and go to retail these days. I mean, it's a seller's market. So that's what you have to keep in mind. So when you're working with a turnkey provider, in my opinion, you're kind of working with the B team already, or someone who just haven't figured it out. And it kind of goes double when you're doing the BRRRR strategy on your own remotely, because I mean everybody's doing it locally. So just kind of know that going in. But I mean, I think the real reason you're doing it is because you're low on funds. I mean, you're in the strange net worth area where you don't have quite enough money to go in as a passive investor and kind of just do nothing and do those deals. But you're a little bit more than an average turnkey buyer. So I think I mentioned this, you just got to keep grinding it out for a few more years like this.
I'm weird. I'm in that weird limbo zone. So I'm always thinking, and you mentioned this before, like what's the highest and best use of my time, and what can I do to keep grinding and keep pushing this agenda of financial freedom. So for me, it was like, hey, if I can connect with a team out of state and do these BRRRRs, then I'll be able to at least continue to build my portfolio out that way.
Right. So let's get into some of the tricks and the habits that we got here, since you're kind of in the trenches at some point. And everybody talks about routines and trying to keep these people accountable from out of state. What are some of the ways that you kind of do that?
So just a little background. So I work as an accountant / consultant for the CPA firm, and my primary focus is compliance work and also internal controls, business processes, and IT, things like that. So I'm all about systems and processes. So as soon as I knew I was going to kind of venture into, passive real estate investing on the side, I needed to figure out, okay, how can I create systems and processes that I can leverage in the long run? So, I made sure to use, things like, Google Drive, where I store all of my things, and I have, various subfolders, and I need to get those documents all filed away so that I'm not digging through a million emails come tax time or whatnot. Also, there are very specific things that I ask for my PM, like my inspectors. They take extra photos for me for certain things, like the serial numbers for like my CapEx items, like a furnace or whatnot. Um, and I kind of created a checklist of what I normally do when I try to close a deal for a 1 to 4 unit. I've seen a lot of people use this on the multifamily side, but I really haven't seen it on the single family side. But so I kind of created my own, kind of the different questions I asked for that property. Um, and also, there are things that I started to learn after I closed on a couple different properties is like, for example, Kansas City. I didn't really know that basements were prone to flooding, and there have been a lot of rain. So, one of my properties has been flooding a lot. So, I consult with my property managers to ask, hey, what are some of the preventive measures that we can take? Do we need to dry lock the basement? Get a new sump pump in there, get a better one, get some ventilation in there, because, I realize that moisture is the biggest enemy to your property, right? So things like that. And then, I also kind of like to keep track of the P&L items, like my income and expenses across my rental units, and kind of gauge, hey, this is what I was expecting, right? Because I do a ton of, budget versus actual flux analysis for my work. And like, hey, this is what I budgeted. This is kind of the result, what I'm getting. This is what I'm trending towards. Granted, it's only been 6, 7 months, but it is kind of important to get ahead of the curve and see, hey, PM, what's going on here? What are the things that I need to do to make sure that we're trending towards, positive cash flow? So
yeah, I think that checklist is a big thing. I mean, if you guys haven't read the book Checklist Manifesto, it's about 100 pages of something you can probably read in the first 20 pages. But basically, use a freaking checklist. That's why, like, all the pilots have it. It just makes total sense. If you can put the certain things on autopilot, then you can be more ready to, address the issues that come up, and, different nuances. Kansas City market has the issues that Bo was talking about. Texas has the sump problems. Other places you got to check for the flood zones. And as you're mentioning that, I have this book out here. This is the Due Diligence Handbook for Commercial Real Estate. Just kind of going through that, and then in the appendix, there's these like checklists of things to do during due diligence and different parts of the process. It's smart to start creating your own. I've got a lot of checklists myself. But yeah, good point out there, Bo. Any other tips and tricks you got here?
Yeah, I mean, I think that kind of ties into underwriting a deal, right? So when you're trying to close a deal, using a checklist. And I see so many times, now that I kind of post comments on Bigger Pockets and whatnot, they message me via inbox and they connect with me, send me some of their deals. And over time, what I noticed is like, hey, in the beginning, this is my criteria. And then, a month later, 2 months later, because it's such a seller's market, they're going to start deviating from that criteria. If they were looking for, above $900 in rent and, $70,000 for a property or something like that, and they're like, oh, I still want the $70,000 property, but the rents are going to be about $750. But, I want to buy a house, so I'm going to just go for it. And I think you need to really take a step back and have a valid reason from why you're deciding to deviate from your initial criteria. Because if you're just on the hunt and you're just trying to, add more doors to your portfolio, it could really get you into some trouble. So you want to be very sure that you're doing it for a specific reason. It's because, hey, I'm able to get this for 50 cents on the dollar, or hey, it's a different strategy. I'm trying to do Airbnb, so I'm willing to pay a little bit more. Or hey, I'm venturing into a new part of town, and this is the reason why I'm going to do it. And you also want to run that by a couple locals. So that's why the key is to fly out there and build a relationship. When I went out to Casey in India, I probably paid at least $1,000 buying dinners and lunches to all of the locals. And, just so that when I reach back out to them, they're willing to respond, and they're like, hey, I remember having breakfast with Bo, and okay, I'll take a quick look at your deal. And they'll give me that feedback. And that lunch for like $50 is totally worth it, because I found out something about that street that I wouldn't have known if I was not a local. It's like, hey, that street, this literally happened actually. That street has two neighbors who, are causing so much trouble. Police are always coming. But I thought that was a super deal. I thought it was like 40 cents on the dollar. Things like that are very important. So go ahead and build relationships, use a checklist. If it deviates from your criteria, make sure you understand why. And then lastly, people who do multifamily do the reversion cap rates and things like that. But I also love to stress test my property. I lower my rents by 10, 15%, see, what the cash flow is going to be like, increase maintenance and vacancy, see what that's going to be like. It kind of goes back to my job in risk management. I'm thinking, what could go wrong, right? And you have to think about those scenarios. You can't just be like, oh, the pro forma looks good, and my own pro forma, I tested it and it looks good, but you really want to stress test it when really, the poop hits the fan.
Yeah. And if you guys haven't grabbed my analyzer, I think the URL is simple passive cash flow / analyzer, or it's at the main Turnkey page, simple passive cash flow / Turnkey, where I try and throw up all the information I have up on there. But it's a spreadsheet, and it kind of shows all the rules of thumb and guidelines for all the extra expenses that you need to account for in your underwriting. And that's exactly what Bo's kind of talking about here. I think we had a good discussion about this. What happens in a recession, right? I mean, different places, A class does something different than the B class and C class. They'll have their different nuances, and it's all theory, right? Nobody really knows what's going to happen, but by stress testing the rents, increasing the maintenance and vacancy, you can kind of see how strong your investment is. So let's kind of wrap things up, Bo. What's kind of, you got a new guy listening. He's gonna go to simple passive cash flow / Turnkey, read that stuff, but then he's filled his mind with all this great wisdom. But then, what would be your advice to a scared newbie getting started with buy and hold investments out of state, something where they can't feel it or touch it?
Yeah, I mean, I had the same issue when I was just starting up. There's that fear, right? I think the way to overcome that fear is just to really educate yourself and, get comfort. You're not going to fully get rid of that fear, but you're going to get comfort enough to kind of step over that fear. And, I like to kind of share a favorite quote of mine that says, it's not what you don't know that gets you into trouble, but what you think you know that just ain't so, right? So, the way that I interpreted this quote is that, I don't know if you've ever played the game telephone, and there's people, relaying information to the next person. By the time it gets to the last person, it could be distorted, and it's not the, original intended message. So sometimes, I hear investors, who are saying the sky is falling. And I know a lot of people who thought, 2015 was the peak or 2016 was the peak. They really don't know. Nobody has a crystal ball. So you want to make sure you do enough due diligence. You talk to many different investors, you get multiple viewpoints, you fly out to the market, you do your stress test. I know it's a lot of work, but it's going to help you in the long run. And once you do that, you should be comfortable enough to make that jump into real estate investing. Because at the end of the day, you've already made your decision. You know that this is what you want. This is the way to, creating that passive cash flow, getting out of the rat race. So you just need to make sure you kick yourself in the butt, do your due diligence, don't overlook that stuff, and then take massive action. 10x it.
Yeah, and I think what you're mentioning there is like, the 4 stages of learning. the first stage is you don't know what you don't know. And man, I talk to a lot of people like that, and I kind of scratch my head. But you don't, until you get to a point of stage 2 where you at least know that you don't know jack. I think that's a point where you can kind of move forward. I feel like, right now, Bo, you're kind of in that stage 3 where you're consciously, you're moving forward, you're doing things. Stage 4 is, kind of that area where it sort of becomes unconscious to you. And of course, the cool thing about the 4 stages of learning is that you eventually become a mentor and kind of pay it forward too. That's kind of that 5th stage that nobody talks about. But what's next for you, man? Like, once you're gonna get what, 5 rentals, 10 rentals? What are you gonna do after that?
I think I'm going to continue to kind of build my portfolio out in those markets, Kansas City, India, and Little Rock. And my biggest passion in life is to really help other people. And I'm not just saying this, is, I really find joy. I think it's one of my love languages. Like, when I serve my wife and serve my family, I do things for them. I really find joy. So, from the
Acts of service, right?
acts of service, exactly. So, from the same standpoint, I want to pay it forward. There's guys like, Brad Lane and, my indie mentor who just really helped me. I didn't really give that much value, if any, to them. And, they were just willing to kind of, provide that guidance for me. So, I've had tons of people on BiggerPockets hit me up or, just email me. So I realized, hey, I'm kind of saying the same things over and over. So I decided to create a blog. It's biggercashflow.com. And, I kind of share my nuggets of information there. And, if people reach out, I talk to them. And ultimately, I want to just, help, other investors who are starting out and, my friends and family. That's my why, right? Because I ask a lot of my friends, what they would be doing if, money was not an issue. This is a discussion I have with, some of my coworkers and some of my family. And, I get a lot of blank stares because they haven't really thought about it, right?
Like this, yeah.
Yeah, they're like, what? Yeah, what? Money's not an issue? And, once they've let that question sink in and they really think about it, they're like, oh, you know what? Like, my passion is to, be a DJ, or, I actually want to be a sports commentator, or, I want to be a travel blogger. I want to build homes for the homeless. These are very purpose-driven things. And it makes me realize, hey, but we're stuck in this rat race that doesn't allow us to look at the side. We're just, kind of got our blinders on. We're headed towards that goal that Wall Street is telling us, hey, put money away in your 401k and IRA, and then we got your back in 40 years. You can tap into that. And, that's just a blatant lie. I've actually worked for, a financial services company. So I know a lot of the fees that are inside these, mutual funds and things like that. And, for me personally, I want to help them realize that, hey, there are things that we can do. There are steps that we can take right now to, contribute to our future. And we don't have to live the life that was told to us by previous generations. There are no more rules. You see these young Instagram influencers, everybody's an influencer these days, doing their travel blogging, doing their, technology, mic reviews and like camera reviews. And, they're making a lifestyle out of that, and it's perfectly fine. There is no more rules. And if you've decided that real estate is, tangible, it's a way for financial freedom for you, I think, you just have to take massive action and set your targets high.
Yeah. Well, I mean, I just kind of made this podcast because I was learning. So it's nice to meet folks like yourself.
Yeah,
Yeah.
for sure.
But you want to get your URL out there one more time for people to get a hold of you, and yeah, we'll kind of stay in touch, man.
Yeah, for sure. My website is biggercashflow.com, and my email is bo at biggercashflow.com. So, reach out if you have any questions. I'd love to connect with other investors.
All right. So you guys can check that out and compare sizes, I guess. So see if his is really bigger. So, all right, Paul. Talk to you later, man.
All right. Thanks, Lane.
Hey, Simple Passive Cash Flow listeners, I'm very excited to be announcing our very first Hui Investor Tour. I'm taking you guys out to Atlanta, Birmingham, and Huntsville. Check out some properties, meet some people I work with, and for the most part, just get you guys comfortable with the Class B and C locations out there. I think a lot of you guys are going to be pleasantly surprised in what you get for 100 grand out there that can rent for potentially $1,000. So it's be taking place on July 21st to the 24th, 2019. And I think one of the biggest draws is you guys get to connect with some of the other people out there. So check out the info page here. We've got some early bird pricing. It's going to be, the price will likely be going up. One of the big reasons I'm doing this is because, some feedback I've been getting is, I've sent some people up to kind of connect with my folks, and then they come back and they're like, oh, wow, that really makes me feel a lot better. And I was able to build a lot of personal relationships with property managers and get a sense of the neighborhoods up there. And now I don't got to go back because I don't want to go back to Birmingham because it's a little boring. So some of what you'll see is, well, we'll take some tours of some properties, some of my properties. We'll even check out some apartments, and we'll meet some people. We'll have some dinners together as a group. So that's the big thing about building relationships with other serious and passive investors. The itinerary will be on Sunday. We'll be arriving into Atlanta. You guys are in charge of your own flights because you guys are grown-ups. We'll kind of rally up in the evening. That'll be the travel day. So rally up in the evening at the hotel. I'll have a little program for you guys. We'll kind of do a little mixer. We're trying to incorporate a lot of fun into this. But the next day, Monday, it's our early rise and shine. We'll be heading out to some properties and meeting a bunch of people. And then we'll try and do a little bit of fun tourist activity, either on the Beltline, which is the old converted railroad tracks it's kind of a big linear park, upscale park that goes around the city, or we'll do something in Decatur, which is on the east side of Atlanta, which is where a lot of my rental properties are, and you'll see a lot of the gentrification out there. Also on the next day, on Tuesday, we'll be heading out as a group to Birmingham and kind of be doing the same thing there. Birmingham's not as fun, but we'll have some barbecue out there, and then we'll do another evening workshop at the hotel. Hotel arrangements will be all at we'll try and make it all at the same site. You guys are in charge of your own hotel, but we'll make sure that we'll kind of stick together. It's a lot safer and it's a lot more fun, and it gives you guys an opportunity to connect with each other. On the fourth day, Wednesday, the plan is you guys are going to go out to, you guys can choose your own adventure. You guys can come with me to check out my deals in Huntsville, check out the location, or if you guys just want to go out and break out, there's a Kansas City and Braves game at 7:30, where you can go see that mythical panda at the zoo. So, that's one of the things why I like investing in real estate. It gives me an excuse to go out to places I wouldn't, and, do some tourist activities and be able to write it off as a business expense since I'm out there doing business most of the day. So it's going to be a very fast-paced, fun trip. The idea is get you guys in there, get you guys acclimated with the location, get you familiar. We've got a lot of special guests, a lot of the people I trust, and they'll be dropping their knowledge on you guys, helping you guys out. It'll be sort of like a boot camp style. You guys can be able to ask me any questions. I'll be with you guys the whole time. And make sure you guys hurry up. And our pricing is going to be going up after the early bird special. It's going to be a little bit of price break if you guys want to bring your spouse. Again, you guys are on your own for your guys' hotel and food costs, and we'll try and figure out a way to split up the transportation once we get a finalized head count at this point. Mastermind members, if you guys haven't heard about that, simplepassivecashflow.com/journey, you guys will be getting a 30% discount. Some of the frequently asked questions here, we talked about the hotel. We'll be trying to get a block of rooms all in the same place, just mostly again for safety reasons. But I want to make the tour very flexible for you guys. So if you guys can only make it on like 1 or 2 days, that's better than nothing. And you guys will, you guys be into the whole program of meeting the folks and seeing the right things. But if you just want to dig out and go to a Braves game, that's totally fine with me. we're going to try and keep the group size a little small, 8 to 15 people, enough to fit in a van and a few cars, just so everybody gets to meet each other. I always try and keep it a more of an intimate environment, kind of conducive to networking. And I personally would fly out of Atlanta the day before or day after. Or if you want to turn it into a vacation, you go to Orlando and go to Disney World, that's up to you. But if you guys have any more questions, don't be afraid to email me, Lane at simplepassivecashflow.com. Check out the website, simplepassivecashflow.com/tour 2019. And I'll hope to see you there in June 21st in Atlanta. Bye.